General purpose framework, a financial reporting framework designed to meet the common financial information need to wide range of users. So, a financial statement is for what? For showing that a company is doing this act. It is doing well, not well. It is average, performance good. Such a way they need to say. To whom it's intended is to user. So financial reporting framework may be a fair presentation framework or an compliance framework. So presentation of financial statement is for two things. One, it's for government compliance. Second is for fair presentation for user. The fair presentation framework is used to refer to a financial reporting framework that requires compliance with the requirement of an framework. Okay, they need to compliance, go through all the compliances to do it. The acknowledgement explicitly or implicitly that to achieve the fair presentation of financial statement, it may be necessary for the management to provide disclosure beyond that specifically required by the framework. So, what are they going to give in the financial reporting? They're going to acknowledge something. Acknowledge how? Implicitly or explicitly. Openly, they're going to say something, or indirectly, they're going to say something, or it implies this way, such a way going to say, to achieve the fair presentation of financial statement. The goal is to provide information to intended user, that is shareholders or financial advisories or bankers or any other person who financial reporting of that company require. So that is only the thing. That is only the case. If he asks so, it's not. And what are the things there? To disclose all the things. That is good. Then acknowledge explicitly that it may be necessary for the management to depart from the requirement of the framework to achieve the fair presentation of the financial statement. Sometimes a management need to depart from the actual present financial statement and give more data. That statement says so. Example for any NDAs need to disclose some event. If they disclose as per the accounting standard is good, but sometimes they need to give more information. So that makes the clarity of the financial statement to the internet users, it's much more very useful. Such departures are expected to be necessary only in external rare circumstances. Yeah, they're going to take an acquisition or a merger or a liquidation. These are not usual circumstances. It's usually unusual. Going concern is affected. That is unusual circumstances. Bad debts became recover. Bad debts uh, which became recovered. That is very unusual information. Company is going to had destroyed every stock. Company's stocks has been destroyed in the fire or any natural calamities. The company is now in an insurance claim. Based upon the insurance claim, company's going concern is going to be predicted. And that is a very rare circumstances. So that the compliance framework is used to refer the financial reporting framework that requires compliance with the requirement of the framework, but does not contain acknowledgements. What is this compliance framework is MGT7 AOC4 need to file to the MCA government. For filing that MCA governance, they need to give subject specific clauses. Some clauses are required. That clauses are specified there. That is one. Second, GST they need to GST they paid something. Out of that they need to file GSTR 9 tax audit. GSTR 9C they need to file. So whether it is been filed or not, that is a compliance requirement. Income tax need to be filed. It's a compliance requirement. For banking they need to file a report with RBI. That is a complaint requirement. For a listed company they need to provide a statement to SEBI. That is a compliance requirement. So such a compliances, if a insurance company, IRDA, they need to provide the acknowledgements and they need to give specific form. That's a compliance requirement. This is what the compliance has been said.